All right. Hi, everyone. Welcome to today's live analysis session brought to you by IC Markets Global. Right. Okay. Before we start, all right. Hi, Kamarudin. Good to see you. Audio. Just want to make sure audio and video is all clear. All right. I think we're good to go. All right. Connection's good. Video and all. All right. Okay. Hi, everyone. Welcome to today's webinar session brought to you by IC Markets, where we'll be looking at live analysis. All right. Let's before we start the new trading week off. Let's uh let's go to the disclaimer. All right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Please take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Adverse Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so before we dive into the charts on TradingView, let's take a quick look at what's coming up this week. We've got 3 central bank announcements lined up, as well as US CPI data and PPI data as well. Right, so if you look at the calendar, this is the calendar for this week. I'm on GMT time. Take note of my of my time zone here. I'm on GMT time. Hang on. Oops. Right. Sorry. Okay. Right. Back in. Just making sure. All right. Okay. So, right. So so my calendar shows the the key events lined up for this week, and I'm on GMT time. So right, okay, so we've got the RBNZ releasing its official cash rate statement on Wednesday, 2 a.m. GMT. Then we've also got the Bank of Canada lined up later on in the day at 1:45 p.m. where they will release their overnight rate statement, as well as the press conference by Governor Tiff Malcolm. On that same day, we have US CPI data that's going to be released on Wednesday, 12:30 p.m. GMT time. And of course, then we've got the ECB announcing their monetary policy statement where on Thursday, 11th of April, together with ECB President Christine Lagarde's press conference, delivered 45 minutes, no, half an hour after the statement release at 12:45 p.m. GMT. Right. We've also got PPI data coming up on Thursday. All right. So when we look at US CPI data, right, we see a potential re-acceleration in the annualized CPI reading. So on the left, I have the chart for headline CPI, and on the right, I have the chart for the core CPI, both of which are showing the annualized readings for the respective indices. We can see that the estimate for March is pointing to an increase of 3.4%, growing from February's result of 3.2%. Right, so we do see a potential re-acceleration in headline CPI on an annualized basis, and if we see a set of data results that show inflation coming in hotter than expected, this is quite likely to trigger it's like quite likely to function as a bullish catalyst for the dollar. Right, so we potentially see dollar bulls return on Wednesday, 12:30 p.m. GMT time. Should we see the respective inflation data picking up very strongly, right? If they come in higher than the respective estimates on a monthly basis as well as on the annualized basis, we are likely to see the return of the dollar bulls. Right, next, right, prior to the release of the US CPI data during the Asia session, we're going to see the Reserve Bank of New Zealand release its monetary policy statement where they're expected to keep the official cash rate on hold at 5.5%. This is quite likely to occur because although inflation has trended lower over the last few quarters in New Zealand, it is still well above the RBNZ's target of 2%. On the left, I have the chart for headline CPI on an annualized basis. On the right is the core CPI data on an annualized basis, right? So we can see both uh, indices, right? Inflation indices, uh, well above the target of 2%. So although inflation has trended lower, it is not well, it has not reached the target, and because of that, the RBNZ may be inclined to keep rates on hold in order to put more downward pressure on inflation in New Zealand. Right. Next, we have the Bank of Canada. They are likely to, well, they have been estimated, they have been forecasted to maintain their overnight rate on hold at 4.5%. No, wait, sorry. Is it, what's their overnight rate? Sorry, at 5%. They have been forecasted to maintain their overnight rate at 5%. However, when we look at inflation in Canada, on the left, once again, I have headline CPI on an annualized basis. On the right, I have core CPI on an annualized basis. Right, we can see inflation has trended much lower and is inching very close to the target of 2%. So given the fact that inflationary pressures have indeed dissipated quite strongly in Canada, we may see a surprise rate cut by the BOC on Wednesday. Now, should that happen, the Canadian dollar is likely to sell off very strongly, and that would mean the currency pair dollar CAD is likely to spike on this day. Should we see a surprise rate cut? Right. And finally, on Thursday, we have the ECB. Their main refinancing rate has been held steady at 4.5%. And when we look at inflation data in the euro area, it paints a similar story to Canada. We see inflationary pressures have dissipated very strongly in the EU, right? When you look at the chart on the left, once again, on the left, I have the chart for headline CPI. On the right is core CPI, both of which are showing the inflation levels on an annualized basis. We can see that they've moderated lower quite significantly and are inching closer to the target of 2%. Now, because we can see inflationary pressures retreating very significantly, we may see a surprise rate cut by the ECB as well, right? We should not rule out any surprise rate cut. Although if they do not take note, if the Bank of Canada and the ECB do not cut their respective rates, we may see a very dovish statement and press conferences during on Wednesday and Thursday as well. So take note, although we may see a surprise rate cuts by these two central banks, however, if that was not to occur, we are likely to see a very dovish outlook on future monetary policy, which would then add pressure on the Canadian dollar as well as the euro. That means dollar CAD could potentially jump and euro USD is likely to fall. Right, okay, with that, let's jump over to the charts on TradingView and let's start the analysis on the 4-hour time frame. Right, okay, so here I am on the chart for the dollar index. I'm on the 4-hour time frame, and we saw last Friday, 5th of April, we had the non-farm payrolls data that was released. We saw the unemployment rate edge lower down to 3.8% if I'm not mistaken, while we had about well over 300,000 jobs being added to the US labor market. Now this figure of 300,000 was much higher than the estimate of about 210,000, right? So we saw a pretty robust employment report, which initially caused the dollar index to spike as high as 104.70. However, this move was short-lived and we saw a pretty strong pullback occur on that day itself, and the dollar index closed around, let's see what it is, closed around 104.30 last week. It has opened around the same level and has somewhat retraced a little bit higher as well, right? So we could see the dollar bulls return this week, especially if US CPI data on Wednesday comes in hot once again. Remember, we CPI data for the months of January and February pointed to stronger than anticipated inflation data, and the estimates for March, which is the data that will be released on Wednesday, is pointing to potentially pointing to another hot number as well. Right, so because of that, we may see the dollar bulls return on Wednesday, especially if CPI comes in hotter than expected. All right, okay, with that, let's try and identify where the key resistance and support levels are for today based on the 4-hour time frame. All right, so we can see here on 4th of April, the dollar index found pretty decent support here at around 104. This is a pretty decent pullback support level. Not only did the dollar index bounce off this level on 4th of April, it did so on 26th of March as well. So this tells me this is a pretty significant or this is a strong support level, which I'm going to identify as my first support. Right, first resistance is quite clear. It is this pullback resistance that occurred on the 1st and 2nd of April last week. Right, so after rebounding strongly in middle of March, price finally ran into resistance last Monday and Tuesday and has reversed quite sharply since then. Right, so quite clearly first and resistance and first support are pretty straightforward. Second support as well. When I look across this price level here at 103.22, we can see the index has made a pretty strong or pretty significant swing low bounce of this level here on 21st of March. Right, okay, with regards to the second resistance for the dollar index, if I look across, if I zoom out a little bit and look across this level here at around 105.45, we can see previously back in November of 2023, this dollar index found strong support here from 7th of November till the 9th of November before retracing a little bit higher. And as price broke underneath it, what was previously a pullback support level could now potentially function as resistance. So we're going to use this level to identify our second resistance. Right, okay, so now that we know where the first and second resistance and support levels lie, we can also use Fibonacci retracements to help us add additional significance to these levels. Right, we can start the first retracement from here, from this low on 21st of March going up to the high here on the 2nd of April. Let's pull up all the fibs. We can see that the 61.8% Fibonacci retracement aligns quite close to the first support, so let's just keep that on. So the first support is more of a zone rather than an absolute level. So the support zone runs from 104 down to 103.90. Right. We can also run another Fibonacci retracement, this time from this swing low here on the 8th of March, going up to the high on the 2nd of April. We may have a 78.6% on hand. Let's see. No, 78.6 is simply too far. That's fine. Let's not force a Fibonacci retracement onto our analysis. Should there not be one? Okay, that's fine. With regards to the second resistance, there may be a Fibonacci extension that we could use. Right, to find a potential extension level, we're going to use the retracement tool. So we're going to start from here, 14th of April, down to the swing low here on the 8th of March. Let's see if there's a 127% extension that we could use. Nope, it's this pullback resistance level here is lying below. So however, these extension levels at 127 and 161 could potentially be used should we see the dollar index continue to rise higher. But for now, they are simply not useful. So let's just get rid of it for now. But it's something to bear in mind in the future should we see the dollar index bounce higher. All right, okay. Then with that, let's look at let's look at this leg of the move here, right? This downtrend here, starting from 2nd of April down to this pullback here on 4th of April. Let's pull up all the fibs. I think there's a pretty decent intermediate resistance level, and that I would like to identify at the 61.8% Fibonacci retracement. Right, when we look across this price level here, this is a pretty decent intermediate resistance at 104.68. Right, which is a level we can see price finding support here on 2nd of April and 3rd of April before finally breaking lower. And then on non-farm payrolls day, 5th April, we saw dollar index spike higher, but it ran into resistance at this overlap level at 104.68, which aligns well with the 61.8% Fibonacci retracement. Right, so these are the key levels for the dollar index based on the 4-hour time frame for today. And remember, should we see inflation data in the US, especially with CPI data up on Wednesday, coming hotter than expected, we may see dollar index potentially break above this intermediate resistance and make a rise towards the first resistance at 105.07. All right. Okay. We've got the Bank of Canada, or rather we've got the RBNZ releasing their statement first. So let's take a look at the Kiwi. Right. So if you look at the Kiwi, since let's start on a daily time frame. Right. So since the 7th of March, so since the second week of March, the Kiwi has reversed quite strongly, reversing from about 61.80, dropping to as low as 59.50 last week as well. So price, this currency pair retraced a little bit higher last week. However, it gapped much lower at today's open, but it managed to bounce a little bit higher. But we do see the downtrend still intact, right? We still see a pretty bearish outlook for the Kiwi. However, this currency pair could retrace higher on Monday and Tuesday before finally reversing, right? Remember, if we see a dovish outlook by the RBNZ on Wednesday, we are likely to see the Kiwi sell off hard, and that means we could potentially see it reversing around 60.50 and even perhaps drop below this first support here at 59.50, right? This pullback support level here is the first major support for the Kiwi. Right. Okay, now let's switch to the lower time frame. Let's go to the 4-hour time frame and fine tune the analysis. When we look at the 4-hour time frame, right, first support is at 59.43. This is pretty clear. First resistance is this pullback resistance that occurred here last Thursday and Friday, right? You can see price failing to break above this level of 60.41. So this is where the first resistance has been identified. Second resistance is another swing high that occurred on 21st of March at 60.94. Right, what about the next support level? Should this first support be broken? When we look across this price level here, actually if I extend my first support, we can see this is like a multi-swing low, right? This is a multi-swing low for the Kiwi. We can see back on 17th of November, the Kiwi reversing off 59.40 very strongly as well, and making a very strong bullish bounce. And similarly, last Monday and Tuesday as well, price found strong support here to retrace higher as well. So first support at 59.40 is a multi-swing low resistance, multi-swing low support. And to identify the next support level for the Kiwi, it'll be this swing low here that occurred on the 14th of November 2023. This is the next major support for the Kiwi here at 58.64. Right, although this is a huge gap between the first and second support, but when I look at the market structure here, right, I don't really see any other major support levels apart from this swing low that has occurred here. See, this is a very significant swing low that occurred on the 14th of November 2023. Similarly, for the first support, we see another strong swing low that took place on the 17th of November as well. Right, so these are the major support levels for the Kiwi on the 4-hour time frame. Right, we can also add some Fibonacci retracements to the analysis. I also see an intermediate support. I think many of you would have spotted this level as well. This is at 59.95, right? We can see price finding decent support here last Friday before retracing higher as well, right? This is I would identify 59.95 as an intermediate support level, and I believe it also aligns close to a 50% Fibonacci retracement. Right, let's try it out. Let's start this retracement from here, 1st of April, going up to the high here on the 5th of April. Yes, I do believe it should be the 50% Fibonacci retracement that aligns very well with this pullback support at 59.95. We can also run a Fibonacci retracement from this swing high here on 21st of March, going down to this low here on the 1st of April. I believe it's a 61.8% Fibonacci retracement that aligns very well with the pullback resistance that has been identified at the first resistance. Right, then there's another, I believe this should be the final retracement that we can draw on the current analysis. We're going to start from this top of the wick here, 8th of March, going down to the low here, of course, on 1st of April. We can see that the second resistance, this swing high or this pullback resistance here, aligns quite close to the 61.8% Fibonacci retracement. We can see the top of this wick on 21st of March coming pretty close to 61.8. So let's just highlight this as a zone as well. All right, so these are the significant resistance and support levels for the Kiwi. Take note, we've got the RBNZ dropping its monetary policy statement on Wednesday at 2 a.m. GMT time. Should we see a very dovish statement by the RBNZ, this is likely to cause the Kiwi to sell off. So we may by then on Wednesday, we may potentially see the Kiwi reverse from the region of the first resistance and potentially drop through the intermediate support and potentially drop all the way down towards the first support at 59.40. Right. Okay, so that's the analysis for the Kiwi. Then up next, later on Wednesday, we've got the Bank of Canada releasing their monetary policy statement as well. Right. Similarly, we may see, not similarly, but we may see a surprise rate cut by the BOC on Wednesday. Why do I say that? We see inflationary pressures have dissipated pretty strongly in Canada, and both the headline CPI and core CPI are inching closer to the target of 2%. So the Bank of Canada may take an early start to the interest rate cut cycle, and they may begin cutting rates on Wednesday, as early as Wednesday as well. If they do not cut rates, I do feel they will still lean on the side of being dovish, and that could then potentially mean the Canadian dollar is likely to sell off. So that would mean this currency pair, dollar CAD, is likely to move higher on Wednesday, right? So when we look at the 4-hour time frame, right, when I look across this level here and around, okay, wait, I think this is better on the daily time frame. Let's just start on the daily first, and then we can fine tune the analysis on the 4-hour time frame. Right, okay, this is much more easier and much more to visualize, right? So when I look across 1.3613, this is a pretty significant pullback resistance where dollar CAD has failed to break above since the end of November, right? We can see price running into resistance here from 27th of November till 12th of December, right? Failed to break above this level here. Then similarly, at the end of February and early March, it once again failed to break above this pullback resistance, and of course in the third week of March as well. Last Friday, we did see dollar CAD briefly break above this first resistance at 1.3613, but the move was short-lived. However, it could be a dovish Bank of Canada that's likely to function as a bullish catalyst for this currency pair. So should that were to happen, we are likely to see a potential bullish breakout take place for dollar CAD. And then if that were to happen, where could we identify the next resistance level, right? We can use a Fibonacci retracement to help us identify that level, right? We can go to start this retracement here from this high here on 9th of November, going down to this swing low here on the 26th of December. We can see that the first resistance lies in the vicinity of the 61.8% Fibonacci retracement level, right? You can see that not only was this a strong pullback resistance level, it also happened to align very well with the 61.8% Fibonacci retracement, right? There could be a 78.6% that we could use to help us identify as the second resistance, right? So when I look across where the 78.6% Fibonacci retracement level is, I do not really see any major resistance, but I do see a pretty decent pullback resistance at 1.3755. Right, so probably there's a strong resistance zone that is bounded by this pullback resistance at 1.3758, as well as the 78.6% Fibonacci retracement, right? This is more of a zone here, right? In terms of support, we can see that dollar CAD has approximately ranged between 1.3450 and 1.3612 since 7th of February, right? Since the second week of February, this currency pair has traded sideways, ranging between 1.3450 and 1.3615, right? So it has been there's been no real major catalyst to break this currency pair out of this upper and lower bound. However, the Bank of Canada could be the trigger that is needed to potentially drive it higher on Wednesday, right? So when I look across, this is the zone here on the daily time frame, right? Okay, with that, let's move on over to the 4-hour time frame and fine tune the analysis, right? We can see here first resistance. Most likely, I'm just going to inch it a little higher here on the 4-hour time frame. Okay, this looks a little bit better. And then when we look at it, when I look at this market structure here on 4th of April, this looks like a pretty decent swing low um, bounce here that occurred. So this level at 1.3486 is where I would identify the first major support for dollar CAD on the 4-hour time frame, right? We can see price making a very significant swing low bounce off this level here last Thursday to rebound pretty strongly. Second support for the dollar CAD, I would look at this pullback level here, right? We can see this currency pair has found pretty decent support here on 13th of March, 14th of March, as well as making a swing low bounce here on the 21st as well. So this looks like a pretty significant support level to me. So I'm going to use 1.3459 as the second support, and first support of course is going to be at 1.3486. Right, there's also an intermediate support level that I see. Why do I say that? Okay, when I look across 1.3585, previously dollar CAD ran into resistance at this level from 1st of April till the 3rd of April for a period of 3 days before dropping lower, and after, when it finally broke higher last Friday, it found strong support as we closed out last week. So this, what was previously a pullback resistance level, has now turned into an overlap level, and I would identify this as a potential I thought I would identify this as an intermediate support level here. Right, we can also run a Fibonacci retracement. We're going to start this retracement from here. This swing low on 4th of April going up to the NFP high at 1.3647. We can see, I believe it's a 23, is it a 23%? Oh no, I believe it's a 38 then. Right, we do have the 38.2% Fibonacci retracement aligned well with the overlap support, right, which is the intermediate support at 1.3585. So let's just keep 38.2%. Right, okay, so these are the key levels for dollar CAD on the 4-hour time frame. And should we see a very dovish Bank of Canada on Wednesday, then this could then potentially function as a major bullish catalyst that is needed for dollar CAD to break out of this strong resistance at 1.3626. All right, and finally, we've got the ECB coming up on Thursday, 11th of April. Similarly, if we see a dovish statement by the ECB, as well as President Christine Lagarde communicating a very negative outlook on future monetary policy, we are likely to see the euro sell off hard as well. Right. Okay. So before getting to that, Thursday is still quite. It's still about 2.5 days from now. So there's a lot that could happen in between, right? But okay. So let's try and identify the current resistance and support levels for the euro, right? So we can see here this pullback resistance here that occurred last Thursday is quite clearly going to be the first major resistance level for the euro, so that's going to be at 1.0869. We can see this swing high resistance that occurred on 21st of March as the next major resistance level, so that's going to be our second resistance at 1.0933. Right, okay, in terms of support, I see price making pretty decent pullback support here last Friday as well. It's not the most convincing pullback support level here, so as such I'm going to label this as a intermediate support for now. And where I do see the first major support for the euro come in is basically this swing low that occurred on the 2nd of April here last Tuesday. Right, if I zoom out a little bit, is there any other level that we can sort of reference? No. Right, and then since looking at this swing low here that occurred in mid-February, this is quite clearly going to be our second major support for the euro, which is going to be at 1.0700. First support is at 1.0730. Intermediate support at 1.0809. Alright, I think there's a couple of Fibonacci retracements we could run as well. Alright, let's start the first retracement from here. This swing low on 2nd of April going up to the high on 4th April here. This should be the 50% Fibonacci retracement that aligns pretty well with the pullback support level here. So let's highlight this as a zone. Alright, okay, we can also run a Fibonacci retracement from this swing high on 21st of March going down to this low here on the 2nd of April. I believe this should be the 61.8%. Okay, now it's gone past 61.8, so that's fine, no worries. What about 78.6? No, okay. If there's no Fibonacci retracement level that we can reference, that's fine. Let's just leave it out. There's no need to force any Fibonacci retracements onto the analysis if they are not useful. Right, and the final Fibonacci retracement I could draw would probably be from here, 8th of March, down to this low here on 2nd of April. Right, we can see in this case a 78.6% Fibonacci retracement aligned pretty close to where the second resistance is, so I'm more inclined to keep this retracement level for our analysis. All right, so once again, should we see the ECB perhaps surprise us with a interest rate cut, then that's quite likely to cause the euro to sell off hard. So this currency pair could potentially break below this 50% Fibonacci retracement and drop all the way down towards the first support that at 1.0730. This is of course assuming that the euro continues to trade above the 50% Fibonacci retracement going into Thursday, right? Going into the ECB meeting, prices this currency pair is still trading around this region of 1.0850, right? However, as we head into Thursday, certain levels could be broken, right? The first resistance, this current first resistance could be broken, or perhaps even this current intermediate support level here. But for now, let's just assume that this currency pair is trading around 1.0850, and if we see a very dovish ECB, that's quite likely to trigger a bearish breakout, a potential bearish breakout through the 50% Fibonacci retracement, with this currency pair potentially dropping all the way down to the swing low support at 1.0730. All right, so that's what we have for the main for these currency pairs, right? We have the Kiwi, New Zealand dollar, US dollar, we have the dollar CAD, and of course we have the euro, which are all going to be experiencing high volatility during their respective central bank announcements. All right, okay, let's look at gold. All right, gold has been trading at all-time highs. So when you look at a monthly chart for gold, we can sort of truly appreciate this huge rise in gold in recent months, right? It's made an all-time high at $2,354 per ounce. So quite clearly, this is going to be the first resistance for gold prices here, right? What was previously a strong multi-swing high resistance, right? There's a strong multi-swing high resistance around this region of $2,000 per ounce, right? You can see price running into resistance here in August of 2020, March of 2022, as well as May of 2023, right? This level was a major resistance area for gold prices, which was finally broken on last November 2023, and this commodity managed to find support. What was previously a multi-swing high resistance then proceeded to function as a pullback support level before gold bounced higher. So this level at 1,995 is likely to be the first major support for gold on a monthly basis. Right now, with price trading close to the all-time high, how could we potentially identify the next major resistance level? Well, we're going to use a combination of the Fibonacci projection and Fibonacci extension level to help us identify suitable resistance areas. Right, we're going to start with the Fibonacci projection first. So the projection tool involves 3 points. The first point is going to start from here. First is December of 2015, going up to 0.2 August of 2020 and ending at 0.3, which is at September 2023, right? So you can see that this the next major resistance for gold is likely to be around here, the 78.6% Fibonacci retracement level. And should this 78.6% be broken, the next potential resistance is likely to come in at around the 100% projection. But of course, that's still well above where this commodity is currently trading. Right, okay. Then what about extension? We can also use a Fibonacci extension to help us identify areas as well, resistance areas. So we're going to start this extension from here, 1st of March, going down to the low here on the September. Right, the key extension levels lie at 137 and 161%. Right, we can see price has run into a little bit of resistance at exactly the 161.8% Fibonacci retracement. We can get rid of 127% for now. So in view of this, I think I would highlight the first resistance as a zone rather than an absolute level here. So the first resistance for gold prices is this region that's bounded by the 78.6% Fibonacci projection as well as the 161.8% Fibonacci extension. Right, this is indeed a major resistance zone for this commodity here. Now, should we see it break above this first resistance zone, then perhaps the next resistance could come in at around the 100% Fibonacci projection, which is at, second resistance, which is at the price level of $2,640 per ounce. All right, is there anything else that I could potentially use? All right, maybe there's one more projection that I can try. Let me see. Let's try it from here. September 2022 going up to 0.2, May 2023. All right, no, this was already yeah, these projection levels are already invalid. Okay, that's fine. Let's leave it out. All right, so based on the monthly time frame for gold, these are the current resistance and support levels. Let's zoom in over onto the weekly time frame and try and fine tune the analysis. Right, so on the weekly time frame, when I look across this price level here, this looks like a pretty significant overlap level at $2,143. Right, we can see price running the resistance here on 4th of December, in the week of 4th December, and then after that, as it broke above it in March, it found strong support here in the middle of March for a period of 2 weeks before finally reversing to bounce higher. So on the weekly time frame, I would identify this level here at 2,143 as my first support. And then for the second support, I would just fine tune the analysis and place it here at about $2,034 per ounce. So that's why the second support is going to be based on the weekly time frame. Right, okay, so these are the key levels here. So take note, whenever we move down a time frame, right, when we're doing our analysis, it's perfectly fine to fine tune, right, the levels, because on the monthly and weekly time frames, of course, the candles are going to be a little bit different in terms of the wicks and the closing, of course. So it's perfectly fine to fine tune the levels a little bit as we move down the time zones, the time frames. All right, so these are the key levels here. So of course, if we see the right, so if we see dollar index pull back, maybe on Monday and Tuesday, right before CPI data is released, so we see dollar index continue to pull back, that's quite likely going to cause gold prices to remain elevated. However, take note, this resistance zone between 2,350 and 2,430 is indeed a pretty significant resistance zone for gold prices. But that said, we have seen gold take out many prior resistance areas, right? And it would become as no surprise if this level here or this zone here was to be taken out as well. But of course, if we see stronger than expected CPI data on Wednesday, that could be what is needed to potentially cap or limit any further rise in gold prices here. All right, okay, with that, then let's look at crude oil. So XTI USD is the instrument that tracks WTI crude oil futures. Similarly, in for crude oil prices found strong support around $70.50 per barrel since December and January, and after that, in middle of February onwards, it's bounced strongly, right? It's bounced pretty significantly. It's bounced higher. It's bounced significantly higher since the middle of February, right? Okay, so let's. Okay, so in terms of resistance, right? I see. Right, this swing high resistance here that occurred in the middle of September 2023 as the first major resistance for WTI oil. This is on the based on the weekly time frame, right? This currency pair is currently trading. This commodity is currently trading around $86.20 per barrel. So on the weekly time frame, 91.45 does look like to be the first major resistance. Right, let's zoom on down to the lower time frame. Let's go on to the daily. Right, as I mentioned, it's always perfectly fine to fine tune the analysis. So when I look across now on the daily time frame, this swing high resistance here that occurred on 27th of September, I would use this level to identify the second resistance and then where I would identify the first resistance would be this pullback resistance here that occurred on 19th and 20th of October, right? We can see price once again as WTI oil pulled back initially in early October. It found strong support around $83 per barrel, retraced higher, but it ran into strong resistance around the $90 region before reversing the drop lower. So quite clearly, this is a major resistance area, and then which is what I'm going to use to identify as my first resistance. And second resistance is the swing high that occurred on 28th of September at $94 per barrel. Right, okay, in terms of support, before that, okay, I can also run a Fibonacci retracement. Right, I'm going to start this retracement from here. This swing high here on 28th of September, going down to this low here on the 13th of December. There may be a 78.6% retracement that I could use. Yep, we do see a pretty strong resistance zone between $89.50 per barrel and $90.50 per barrel here. Right, what about support? Right, when I look across this price level here at $83.30, this looks like to be a significant overlap support. Right, we can see price finding strong support here on 12th of October, bouncing off this level once in 12th of October, then again towards the end of October as well before finally breaking under. And when it broke under, you can see it ran into resistance in early November 2023 as well as in the middle of March this year. So this, of course, what was previously a pullback support level then turned into an overlap resistance level, and finally in April, as WTI oil broke above this level, what was previously an overlap resistance level could now potentially function as an overlap support. And when I look at the bottom of this wicks here, right, this wick that occurred on the 4th of April as well as the one that occurred today, we can see price has quite clearly bounced off this level, which is at around $85 per barrel. So I would like to highlight this as an intermediate support. It may not be the most strongest support level, but because of this price action here, I'm quite inclined to identify this level at $85 per barrel as an intermediate support. Right, we can also run a Fibonacci retracement on this uptrend here. We can start from here, the first retracement from 5th of February up to this high last Friday. There is a 23.6% Fibonacci retracement that aligns quite close to the first support here, so that's fine. So let's just keep 23.6%. And there's another Fibonacci retracement that we can use as well. From here, this swing low on the 13th of December going up to this high last week. Once again, we see another 23.6% Fibonacci retracement aligned quite well with the first support here. Alright, so these are the major support and resistance levels for WTI oil based on a daily time frame. Right, let's see if we can fine tune the analysis by dropping a time frame lower. I think this is fine. I don't think there's any major reason to fine-tune the levels. I think this is perfectly fine, right? Okay, so take note, these are the key levels. We've seen crude oil prices pull back today. They gap lower, and WTI oil dropped as low as $85 per barrel. Part of the reason is of easing tensions in the Middle East and a potential ceasefire as well. So should this events actually take place, we may see further pullbacks in prices for crude oil. However, tensions are still running high, right? Despite the current easing in of tensions in this region, uh, historically is still volatility is still high for crude oil, so we may see any pullback as a potential entry, right? So any pullback here could be used as a potential buying opportunity for WTI oil. So should it really come back down towards the first support at $83.30, this would be potentially a very good opportunity to identify a buying opportunity should the fundamentals remain the same. All right, okay. With that, let's see. All right, okay, let's cover the indices as well. Right, let's jump on over to US 500. So this instrument tracks the S&P 500 futures contract. So once again, for indices, I like to start my analysis on a weekly time frame, where we can truly appreciate the recent strength in US equities, right? We can see after making this pullback here in October of 2023, equity markets have really rebounded very strongly, right? I think it's gone from 4,100, so it's gone, it's yeah, the index itself, S&P 500, has risen more than 30-40% since then. 1,000, about 25%, sorry, pardon me, it's risen about 25%, sorry. Since this low of October 2023, the S&P 500 has bounced about 25%. And of course, price is trading quite close to its all-time high, so quite clearly, the first resistance is going to be at 5,282. Right, previously, remember, the S&P 500 made its previous all-time high back in December of 2021, or rather, yes, in January of 2022 at about 4,817. This was the previous all-time high, which finally got taken out in mid-January. So this level here is likely to be the first major support for US 500 based on the weekly time frame. Right, we can also run a couple of Fibonacci retracement levels. Right, we can run the first retracement from here, this pullback level here in October 2023, going up to the all-time high. I believe this should be the 38% that we could use. Yes, that's right. It is the 38.2% Fibonacci retracement. There may be another retracement that we can use as well from here. October 2022 going up to the high here. This should be the 23.6, I believe, right? So that's fine. So we've got a confluence of Fibonacci retracement levels that add significance to the first support. Now, with the index currently trading close to the all-time high, how could we possibly identify the next resistance level, right? So once again, we're going to use a combination of the Fibonacci projection and Fibonacci extension levels, right? So let's start with the extension levels. So we're going to start the retracement from here, January 2022 going down to October 2022. Remember, the major extension levels lie at 127 and 161%. We can see that the index has already broken above 127%, so that's of no use to us. So we'll just keep the extension at 161%. Right. Okay, we can also use the Fibonacci projection tool. So this projection is going to start from here, this low here on March 2020, going up to 0.2, the previous all-time high, and ending at 0.3 here in October 2022. Right, we can see that the 78.6% Fibonacci projection aligns quite close to the extension at 161%. So this is we can use this extension level as well as the projection level to help us identify the next resistance zone for US 500. So the next resistance zone for the US 500 lies around, or rather lies between 5,530 and 5,640. Right, and of course, should indices continue to break higher, then we can then use the 100% Fibonacci projection to help us identify the next suitable resistance area. But for now, of course, this is simply too far from where the index is currently trading, so let's just get rid of it and keep the projection at 78.6%. Right, so these are the key levels for US 500 on the weekly time frame. Now let's zoom on down into the daily time frame and see if we can fine tune the analysis a little bit. Right, I do see a pretty decent pullback support level here at about 5,110. Right, we can see price finding decent support here on 7th of March, 14th of March, and we can even argue last Thursday price found support just above this level before retracing higher. So I'll just highlight this as a potential pullback support zone. Right, okay, is there a 23% Fibonacci that I could use as well on the daily time frame? Let's check it out. Okay, no, we can't. That's fine. All right, so otherwise these are the key levels for the US 500. Right, we could see this index pull back towards this support level here, and should it manage to reverse and bounce higher, this zone here could be used to identify as a potential buy entry for the US 500 as well. All right, then let's look at other index. Let's look at the DAX. Similarly, we can see the DAX is trading at a close to an all-time high as well. Right, the first resistance is clearly going to be at 18,526. Price has made a decent pullback support here last Thursday, so I would use this as an I would identify this as an intermediate support at 18,169. What about the next major support? Right, previously this was the previous all-time high for DAX that was formed on mid-December, and then it formed a new all-time high again in early February this year before finally going on this huge move up here. Right, so how are we going to identify the next major resistance? Right, should this current all-time high be taken out? So for that we have to go down, we have to zoom out into the weekly time frame, and once again use a combination of a Fibonacci extension and projection to help us identify the next suitable resistance area. Right, so we're going to start the projection first, start from this low here, September 2022, going up to the high here, July 2023, and ending with the 0.3 here, October 2023. We're going to use the 100% Fibonacci projection. Of course, we can see 78.6 has already been reached, so of course we're just going to use the 100% here. Right, so this could be the next major resistance for the DAX. Right, what about Fibonacci extension levels? Right, we can run a retracement from here, January 2022 down to this low here, September 2022. The key levels are at 127 and 161%. 127 has clearly been surpassed, so we're going to use just 161%. Right, so we can see that the second resistance is more of a zone that's bounded by the Fibonacci projection at 100%, as well as the Fibonacci extension at 161%. Right, what about support? Support's a bit challenging as well, right? I see it on at least on the weekly time frame, this overlap support level here at 16,491 does look like to be a major support level here. Right, price making a previous all-time high back in July of 2023, and then when price broke above it in December of last year, it managed to find support here for a period of 3 weeks before finally reversing to bounce higher as well. So first major support for the DAX is at 16,491. Right, we can also run a Fibonacci retracement from here, this swing low on October 2023 going up to the high here. Let's pull up all the fibs. Right, we can see the 50% Fibonacci retracement aligned pretty well with the first support as well. So let's just keep 50% on for now. Right, and now we'll move on over to the daily time frame and see if we can fine tune the analysis. Right, okay, we've identified an intermediate support at this pullback here at 18,169. I think I can use another Fibonacci retracement from here. This pullback here on 16th of Jan, going up to the high here, 2nd of April. Let's pull up all the fibs. Okay, 23. Maybe this overlap level here does look like to be a pretty decent overlap level here around the 38.2% Fibonacci retracement. Perhaps this is another intermediate support level that can be used as well. And also take note that this pullback level that occurred at 18,169 lies pretty close to the 23% retracement as well. So let's just keep 23 and 38%. All right, so these are the major support and resistance levels for the DEX based on the daily time frame for today. Right, so we've seen DEX rebound off this support zone here. So should you have any long positions on the DEX where you could target a potential take profit zone would of course be in the region of the first resistance here, which is close to the all-time high. Right, so as this index has rebounded quite strongly off this support zone here today, we may see it continuing to rise higher, and a suitable take profit zone can be identified around the region of the all-time high. All right. Okay, so we've come towards the end of today's webinar, today's live analysis session. I want to thank all of you for tuning in today. All right, so before we end, just take note, this is the economic calendar for this week. I'm on GMT time here, so that's UTC 0. We've got 3 central bank announcements coming up, starting with the RBNZ on Wednesday, 10th of April, followed by the Bank of Canada at 1:45 p.m. GMT. Then we have the press conference by Governor Tiff Malcolm at 2:30 p.m. GMT. On this day as well, 10th of April, we've also got US CPI that's going to be released at 12:30 p.m. GMT time. Then on Thursday, we have PPI data as well. And of course, we have the ECB releasing its monetary policy statement, followed by President Christine Lagarde's press conference as well. All right, and just before we end, we'll just wrap up today's session with the ending disclaimer. All right, please take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, thanks everyone for tuning in to today's webinar, and do look out for all upcoming webinars brought to you by IC Markets. Take care, have a great trading week, and I'll catch you all at the next webinar. All right, thank you.